Hello, humans! Snowball here, and I have flipped the calendar to a brand new quarter. It is the first trading day of the third quarter, and the filing pile is a funny one. The big banks are throwing money at their owners. The cereal maker is telling everybody to lower expectations, and one little crypto dog is licking a very large paper wound. 3 themes, 4 stories, and 1 company reporting after tonight's bell. Let's dig! 3 themes ran the first day of the quarter. Theme 1, the banks opened the vault. 2 weeks ago, the Federal Reserve gave the big banks a clean bill of health on its yearly stress test. So today, they lined up to raise dividends and buy back stock. Goldman Sachs, Morgan Stanley, Bank of New York Mellon, all of them. Theme 2, the snack aisle is still soft. General Mills beat on profit, but told everyone the coming year will be lean. When a cereal maker guides down, you listen. Theme 3, the quiet compounders keep winning. FactSet and MSC Industrial both beat, both expanded their margins, and FactSet raised its dividend for the 27th year in a row. Boring is beautiful. Story 1, the big dogs of Wall Street, and they came bearing treats. On June 24th, the Federal Reserve finished its yearly stress test. All 32 banks passed, and the safety cushion the regulators require was frozen until 2027. No new surprises. So today, the dividend hikes rained down. Goldman Sachs raised its dividend 11% to $5 a share. Morgan Stanley bumped its payout 15 cents to $1.15 and reloaded a $20 billion buyback. Bank of New York Mellon flagged a 19% hike, and U.S. Bancorp filed its own capital return note. The message from every one of them was the same. Plenty of capital, nothing holding us back, here's your cash. When the vault swings open like that, the whole yard perks up its ears. Story 2, the cereal giant and a bowl that is only half full. General Mills closed its fiscal year with fourth quarter sales of about $4.5 billion, up 1%. Adjusted earnings per share came in at 95 cents. That topped the 82 cents the humans expected, and it was up 27%. A good bark on the quarter. But then came the guide, and the guide was cautious. For the new fiscal year, General Mills sees earnings per share of just $3 to $3.20. Organic sales somewhere between down 1.5% and up 0.5%, basically flat. It is chasing at least $750 million in cost savings to protect the profit. The plain English read, shoppers are still going easy on center store groceries, and the pricing game is getting harder. Even a household name has to hunt for its dinner. Story 3, the 2 companies nobody puts on a poster, and they both won. FactSet, the financial data provider, beat on both lines. Revenue of $623 million, up more than 6%. Adjusted earnings per share of $4.53, ahead of what the humans wanted. And then the flex. FactSet raised its dividend 6 cents, its 27th straight yearly increase. That is a dividend that has grown every year since these puppies were born. MSC Industrial, the company that sells the nuts, bolts, and cutting tools to America's factories, joined the party. Sales of just over $1 billion, up almost 8%. Earnings per share jumped to $1.44 from $1.02 a year ago, with fatter margins. The factory floor is humming again. Neither one is flashy, both just quietly fetched the stick. Good dogs! Story 4, the most entertaining pup in the pile, Upexi. Upexi is a company with a very unusual strategy. It holds a giant pile of the Solana crypto token as its treasury, and this quarter, that pile bit back. Upexi reported a net loss of about $109 million. Now, before you howl, most of that loss is not real cash going out the door. It is a paper markdown on the value of its crypto stack, the accountants adjusting the number on the page. And here is the twist. The stack itself actually grew about 9% to more than 2 million tokens. The company says that starting today, July 1st, the rewards it earns from staking that crypto should finally cover its cash bills. That is the big milestone for these crypto treasury dogs. Own the coins, earn the yield, and stop bleeding cash. We will see if this pop can stick the landing. Now the part I love, sniffing out what the options market is bracing for. Top of the list, Greenbrier, the railcar maker, reports its fiscal third quarter after tonight's close. I could not grab the exact straddle price this afternoon, so this one is indicative. But the options market's own fear gauge for Greenbrier is sitting in the 96th percentile of its whole year. Translation: the market is nervous. Based on that volatility, options are pricing a swing of roughly 11% by the middle of July. Watch the order backlog when the numbers land. Below Greenbrier, the calendar fills back up soon. The big banks report their second quarter results the week of July 13th. GFL Environmental cleans up on July 29th, and the Blue Owl credit funds hoot in early August. Nervous options into a quiet week, that is the setup. So that is the first pile of the new quarter, all sniffed out. The banks opened the vault, the cereal maker guided low, the quiet compounders quietly won, and one crypto dog is nursing a paper wound while its coin stack keeps growing. Greenbrier is on the clock tonight, with the options market already twitchy. I will have my nose pressed to the screen. This was Snowball. Numbers are for chewing on, never advice. Go fetch a good quarter.